Hi guys, in this video I'm going to break down whether or not rent-to-rent should be one of those strategies you include in your portfolio if your goals for getting into property is to create a long-term sustainable passive income stream, to secure your retirement, or to create wealth in order to leave a legacy for your family. Now before I do that, what is rent-to-rent? Well, rent-to-rent is essentially where you rent a property from a landlord and then you sublet that property. Now in the traditional sense, you think of rent-to-rent as rent-to-HMO, where you rent a large house and then you rent that house out by the room, or rent-to-service accommodation, where you rent a property and then you rent that property out on a nightly room rate basis. Now the concept of making money from property without actually owning it has been around for a long time. If you think of companies like WeWork and the Office Group, well, they've been doing the rent-to-serviced office model for a long time. Companies like Airbnb, which is one of the largest listing sites, owns no real estate. So the concept of actually making money without owning has been around for a long time. However, the question is, should you include it in your portfolio if your goals for getting into property is to create a long-term sustainable passive income stream, to secure your retirement, or to create wealth in order to leave a legacy for your family? And in my opinion, I believe the answer is no, for the following reasons. Firstly, you don't own the asset, and therefore you don't get to participate in the capital growth of that asset. Yes, you get to benefit from the cash flow. And don't get me wrong, cash flow is great. If you want to go on more holidays, you want more flexibility, or you want to quit your job. But cash flow alone is not going to create wealth. The majority of wealth in property comes from capital appreciation, which happens over a 15 to 20 year period of owning the asset. So if your goal or aspiration is to create wealth in order to leave a legacy, then rent-to-rent as a strategy doesn't align back to that goal. The second reason is control of the asset. So you don't have control of the asset because the person who ultimately controls the asset is the person who owns it, which in this case would be the landlord. Now, yes, you might have a 5-year agreement with that landlord, but what's to say they don't break that agreement or terminate that agreement 3 years into a 5-year contract? And this can and does happen. Now, I hear a lot of people say, why would a landlord do that if they're getting guaranteed rent? Well, the reality is people's personal circumstances change. Maybe that landlord's had a change in circumstances and they want to retire from property altogether. Maybe they've come into ill health and they're looking to dispose of their portfolio. So personal circumstances change, and if you don't control that asset, then you have no control over what happens with it in the long term. So if your goal is to create a long-term sustainable passive income stream, well, the only way you can do that is by having ultimate control of the asset. The third reason is the time demands and time complexities of rent-to-rent as a strategy. Now, most property strategies are passive in nature. However, rent-to-rent is not one of those strategies. It's what we call an active strategy, meaning it requires a lot of your time input. So, for example, if you're doing rent-to-HMO, well, you're going to have to go find tenants. You're going to have to conduct viewings. You're then going to have to check those tenants in and manage those tenants. Now, in the case of an HMO, it's not just one tenant. It could be multiple tenants. You could have 4, 5, 6 different tenants depending on the property. With rent-to-service accommodation, well, you've got to market the property. You've got to deal with any incoming inquiries. You've then got to arrange for check-ins and check-outs, and you've got to arrange for the property to be cleaned between stays. So both of these strategies place a lot of time demand on you personally. And they require you to be available to both tenants and guests 24/7, 7 days a week. So if you're sitting at dinner on a Saturday night and a tenant calls you up in the middle of the winter to say, well, boiler's gone, we've got no hot water, no heating. Well, you can't say to them, look, call me Monday and I'll deal with that. You're going to have to excuse yourself and deal with it there and then. Now, I hear a lot of trainers and a lot of property educators say, well, just hire a property manager, which in theory sounds great. And if you've got 15 to 20 properties in your rent-to-rent portfolio, then yeah, financially it might be a viable solution to hire a property manager. But if you've only got 1, 2, or possibly 3 properties in your rent-to-rent portfolio, and I'm talking from personal experience here, hiring a property manager doesn't make financial sense. Because the minute you do that, well, there's all the margin gone in the deal. Because most of these deals, if you're doing rent-to-HMO, your profit's in the last room, or if you're doing rent-to-service accommodation, you only really make profit at 60, 65% occupancy and above. So some people say, well, just find better deals. where you don't have all your profit in the last room, or deals that break even at 50% occupancy. Well, easier said than done in the current market. Now, if you're anything like our clients, one of their reasons for wanting to get into property is actually to create more time and flexibility in their lives. They don't want to create a second job. So getting into something like rent to rent, which is going to require a lot of your time and effort, again, doesn't lie with the strategy of wanting to actually create time and flexibility in your life. And the final reason is the upfront costs. So rent to rent is one of those strategies that is sort of marketed as a no money done type strategy, which is not entirely true. There are upfront costs, and these costs can run into the thousands. You've got to pay first month's rent. You've got to pay a deposit, which is typically 6 weeks rent. If you're doing Rent-to-HMO, well, you're going to have to bring that property up to HMO regulations. So that means fire doors in all the bedrooms and the kitchen, possibly rewiring the house because you've got to put smoke and heat detectors throughout the house, and you're going to have to furnish the rooms. If you're doing rent-to-service accommodation, you're more than likely going to have to do a full sort of refresh of the property. So new furniture, maybe some feature walls to attract guests in. And that in itself is not a problem if you have control of the asset, because typically the way these deals work is your first 12 months, all you're really doing is looking to recover your initial capital. You'll make your profits in year 2 and onwards, and that's where the problem lies. If you've now spent 12 months putting a lot of time and effort into a strategy to get it to the point where it's going to start to be profitable, and the landlord then decides to terminate that contract, or you put a lot of time and effort in just to get your initial capital back, which in my mind, the risk doesn't make sense. Now, I'm not saying rent-to-rent as a strategy doesn't work. Of course it does. There are a lot of people out there doing it. But from my experience, the people that are successful at rent-to-rent are typically those that are doing it full-time, meaning it's their primary job. Or they are people that are new to property, that have minimal capital and lots of time availability. And all they're looking to do is build up some capital in order to save for deposits. But the question we posed was, should rent-to-rent be considered as a strategy or part of your portfolio if your goals for getting into property are to create long-term sustainable income, secure your retirement, or to create wealth in order to leave a legacy? Well, in my opinion, and our opinion at Property Lifestyle Network is no, it shouldn't be. And it's not a strategy that we advocate to our clients. For the reasons I've mentioned, one, you don't own the asset, therefore you don't get to participate in the capital growth. 2, you don't have control over that asset, so you can't create a long-term sustainable passive income stream because you don't have that long-term control over the asset. And 3, it places a huge amount of, or a large demand on your time and requires a lot of time input. Now, if you're anything like our clients who are busy professionals, well, they want to get into property because they want to create a passive income stream alongside their existing jobs. They don't want to create a second job. So if those are your goals, then rent-to-rent as a strategy doesn't align with those goals. So that's our take on rent-to-rent and whether or not you should include it in your portfolio. If you like the video, then please like and subscribe to the channel for more videos like this.